Please welcome Teana Baker-Taylor, Vice President of Policy and Regulatory Strategy, EU-UK, Circle. Marcel Kasumovich, Head of Research, One River Asset Management and Deputy Chief Investment Officer, One River Digital. Matt Sekerke, President, Ndogenous. And Bloomberg's Erik Schatzker.
Hello, everybody. Once again. You'll see, if you haven't seen already, that the title of our panel discussion is called Out of the Rubble, Can Crypto Make a Comeback? Well, the truth is, crypto has already made something of a comeback. In recent days, Bitcoin topped $30,000 for the first time in almost a year. Ether today is trading at almost $2,000. But I do want to say this. We're not here. The purpose of this panel is not to rekindle speculative fever, the fever that fueled the bubble in 2021 and was followed by a crash in 2022. We're here to debate a very specific and important question, crypto's role in the financial system. So this isn't about Dogecoin, and it's not about Bored Apes. Matt here is an economist. He's a fellow at Johns Hopkins and at Durham University, and he has his own financial consulting practice. Marcel, as you've seen, is he describes himself as a recovering economist. He's the Deputy Chief Investment Officer at Coinbase Asset Management. And if you saw Marcel over the last 2 days, you also will have noticed that he's dressed himself down today. But there's been a little sartorial splendor at work, and I do wonder, Marcel, whether you travel with a Louis Vuitton steamer trunk. And Teana here is the Vice President of Policy and Regulatory Strategy at Circle. And Teana, I like to think of you as a refugee from the banking industry who found sanctuary in fintech.
Reformed. I'm a recovering banker. Yeah.
So to start things off, I want to do things differently. Each of our panelists has a strong, highly informed, and expert point of view on our central question. We could, of course, just talk and tease out those points of view, but instead I've asked the panelists to persuade you, the audience here in the room, the audience online. I want you to sell it, and I want you to sell it hard. Teana, I'd like to start with you. Persuade us. Why should or shouldn't crypto have a role in the financial system?
So if you look at the rate of innovation that we're experiencing today, I think we can all agree, is rapid. Looking at, we heard earlier this week about the European Union's attempt to put some regulatory framework around AI, and between when they started and now, they kind of have to go back to the drawing board because so much has happened, this kind of Cambrian explosion of technology. And what that comes with is an ability to be able to send and receive value, and potentially other types of data, like your identity, for example, using the internet itself. And so you'll hear terminology like Web 2 and Web 3. And in Web 2, we had the ability to send and transmit communication. And we were able to layer on top financial service products that allowed us to send value. But there was friction in between those two because the internet wasn't designed to carry value natively. And ultimately, that's what digital assets allow us to do today. So what purpose does it serve in the traditional financial ecosystem? For me, it's a matter of choice. So I am not one of the proponents of, burn the government down and we're going to replace it with, only decentralized technologies. I think there's a role for decentralized technologies. I think they play an important role in our privacy and privacy enhancement solutions. And I think that's going to become more and more important for us as this Cambrian explosion of technology increases. But equally, there are going to be things that you're going to want to do in probably not that long, 2 to 5 years, that you won't be able to do with the euro in your pocket. And so ultimately, this technology allows us to send, receive, spend, save monetary value in a way that we were able to do with communication. And I think we can all agree that that's epically changed the way that we communicate with each other. And so I think that the way that we transact with each other will change materially.
Marcel, why should or shouldn't crypto have a role in the financial system?
Well, it should. And I go to my roots to start this question, farming, because it's so obvious from a farming perspective. Think of the Malthusian error in logic. The Malthusian error in logic was they were short innovation with that logic, and you never want to be short innovation. So as a farmer and growing up in a rural setting, and owner of a farm in upstate New York, by the way, it's gorgeous, and inexpensive. The main thing that I learned is it takes 3 days for us to farm that property. 2 days of prep and 1 day of harvesting. That's it, 3 days. Super efficient, and it's an inefficient farm. Rich countries have very limited employment in agriculture. Why? Because they've embraced innovation. Poorer countries have a higher percentage of employment in agriculture because they have not. Now think of that in the context of Bitcoin and digital currencies more generally. What Bitcoin did for the world was allowed value transfer between you and I with nothing more than an internet connection. And it's a remarkable peer-to-peer system. It also ensured that the digital asset associated with that was unique and could not be changed. So really, that's the kind of the train, think of that as the train tracks of what we're building. Now, where do we go from here? How do we get to the root of the answer of why do we need this? What's the value proposition? I'll give you three simple examples of where I think we're going with this. One, costless. This is going to drive the marginal cost of financial transactions to zero, which is profound because we're operating peer-to-peer. And how does it drive it to zero? We're cutting out the middleman. What does innovation do? It cuts out the middleman. It allows us to do more with less. So costless financial transactions are the future. It allows us to operate in microtransactions. As an example, how many people here are long Bitcoin or have dabbled in this space? Just a show of hands. So a few. If you haven't, and you're curious what it feels like to do a microtransaction, I'll volunteer sending you sats. A sat is a Satoshi. A Satoshi is 1/100 millionth of a Bitcoin. So call it 3,000 Satoshis is roughly $1. So I can send you a bunch of Satoshis just so you see how it works, and you can operate in digital banking. Costless financial transactions, profound. It allows for micropayments. 2, value. Where do we get value out of this in the bigger picture? So the rails aren't that exciting. I don't want to say Bitcoin up, down, whatever it may be. You need the rails. We have those. They're super effective. Where's the value come in on top? So imagine being in Times Square and think of an advertising model in Times Square. You would see a big billboard with somebody that's getting paid hundreds of millions of dollars to showcase something like Nike. In the future, if you're wearing that Nike shirt and it's tagged as an NFT, you can get paid microtransactions for showcasing that shirt. So there's a value proposition. And the third quick point is truth. So now, did anyone see the picture of the Pope with the big white coat? It's an amazing coat, right? And I looked at it and I said, wow. And then everybody wanted to have this white coat. And it was a fake, okay? So you say, well, that wasn't the truth. So this is tricky, and now we have AI that's generating all these falsities. And you're like, well, how do we figure this out? Well, it's easy. Use blockchain technology. So that camera that's taking a picture right now will have a tag. That tag is an NFT. That NFT is going to sit on the blockchain. And then if I want to use that photo in the Financial Times or whatever it may be, that gentleman's going to start getting paid directly for that. So we've cut out the middleman, and we've delivered value for the picture using digital rails. So don't short innovation. Blockchain generally is clearly the future of finance as a general matter, but much, much deeper than that. And Bitcoin started that revolution. So I'm very excited about these technologies.
Matt, your turn. Why should or shouldn't crypto have a role in the financial system?
All right. My position is that crypto as it currently exists has very little role to play in the financial system, and that some kind of full-scale reconstitution of the space may be necessary in order to integrate it. I will concede to my panelists that crypto offers ways of transacting that are decentralized, that are technologically interesting, but what we transact are tokens, and I'm reluctant to assign value to that token as a matter of course. In some cases it may exist, in some cases it may not. And in a way, crypto is a story and a process of trying to attribute value to these tokens that has been more or less successful in the course of its evolution. So to me, crypto is, it's a big space. It's very differentiated, and it's both more and less than the whole of its parts. The parts I would divide into Bitcoin, Ethereum, stable coins, other stuff that's trying to be money, other stuff that's trying to be corporate finance of some kind. But the whole, first there's the story. There's this gospel of crypto, so to speak, that ignites a religious fervor that begins in the financial crisis and says that really the cracks are appearing in the system. We can't trust the banks. Look at the explosion of the Fed's balance sheet. It was early adopted in California among doomsday preppers who are saying we need something that we can transact with and do business in when the government falls apart. I'm not sure that that's where the mojo of the industry is right now, but it does have this kind of apocalyptic, we need to get out of the system element that is both attractive and, I think, worthy of some skepticism. A second, it's a story about legal white space that I don't know can be sustained, but crypto as a product, one of its primary selling points seems to be to operate outside of legal channels for certain users. And it's also, in discussions around regulation, seems to be assumed that no regulations apply to it, and we need to sit down and write these things for the first time to figure out how to govern the space. Whereas other things that serve the functions that crypto does or purports to serve are already covered by a wide variety of regulations, and it's not clear why the attitude towards compliance in the space has been first absolute disinterest, and now a sort of come to Jesus moment of how do we sort this out. And third, it's a technology. It is a story about blockchain disintermediating things, it's a claim that the technology itself supports the legal white space, that because this is technologically different, it needs to be treated differently, which is a story we've heard from other big companies like Uber and Airbnb. They're getting into a space. It would be really easy to think that Uber is a taxi company. It would be really easy to think that Airbnb is a hotelier. When you try to apply those regulations to those companies, the reaction is kind of one of disbelief, whereas for other reasonable people and for people who are subject to those regulations now, you would think that there would be more obligation on their part to comply. So I think the reason I say that the industry needs to be reconstituted in some way is that we've reached a space where a discussion about regulation has, in policy space, become so difficult and so small that I don't know how to go forward. Because you have a long line of institutions. Don't mean to implicate those for which anybody up here works.
We're fully regulated.
Yeah. But there is this long tail of companies that have really kind of flaunted the law from the very beginning, who now want the blessing of the law. But then there's also the story, and I'll come back to the gospel because I think it's important. And it's very hard for a government to engage with an industry where its primary value proposition or its core belief is that let's give the financial system a push so it falls down, and so that our product can come to the fore.
I'm going to pick up on that point. I didn't know how long it was going to take to get to regulation, but Matt, you got us there pretty quickly. He's right. There is a lot of evangelism, tech evangelism in crypto. And if, as Matt sort of describes it, move fast and break things, the sort of Zuckerbergian approach, is how the community behaves, will it ever make inroads into the traditional financial system? Teana, this is what you deal with on a daily basis.
Yeah, so I think Matt raises a couple of good points, and I would disagree that there have been a couple of corrections, market corrections. You said crash. I disagree. And during those periods, there has been a contraction in the market, and typically that is when actors who aren't adding any actual material value and building things that people can use tend to go away. With any new technology, there's always going to be opportunists. That's just the regular hype cycle of innovation, and so that happens. The comment, though, I disagree with Matt, is that the majority of this technology is being used for nefarious purposes. That's just simply not true. We have loads and loads and years worth of data that demonstrate that that's not the case. Something like 1 point something percent or less than 1% of on-chain transactions is deemed to have any kind of illicit element attached to it. So that's a misnomer, and that's kind of an old school view. The regulatory treatment of these assets, again, I don't think is now it's just starting to happen. Mika's been into discussion and development for close to 3 years. There's a number of jurisdictions that have already put things in place.
Europe being one of them.
Well, so Mika will come into force in about a year from now. The final vote was today, actually, so it is official. But Switzerland, Gibraltar, Malta, Liechtenstein, a number of different jurisdictions have had frameworks in place. But equally, across the globe, there are other jurisdictions that have put in place rules of the road. This conversation often gets hijacked by what happens in the US. And it's true that the US is a big economy, and it's also true that the US is having a really difficult time struggling with how to regulate this space. But that is not to say that other countries aren't taking a first mover approach. The UK, Europe, Japan, Korea, Singapore. There's, across the globe. So, it's really kind of a call to action in the US to try and figure out what they're going to do before people start leaving the jurisdiction for other jurisdictions that have figured this out. But I think in the early days, I don't think there were people that were trying to necessarily skirt regulation. I think that's an unfair classification. I worked for a very tiny exchange, Bitcoin only, the first in the UK. It's gone now. And in 2017, I was knocking on the door of Parliament and the FCA, begging them to at least regulate the trading platforms. So they didn't want to. They didn't know how to. They weren't ready to. So there are plenty of companies, and I could list a whole host. We must keep in mind that the stuff that you read in the papers, no offense, Bloomberg, it's much easier to report on stuff that goes wrong than to report on all the stuff that's going right.
Marcel, I want to know how you think about this from an asset management perspective, and specifically from yours, because what was once One River but is now Coinbase Asset Management serves institutional clients only. Mm-hmm. Institutional clients are not looking for risk for the most part, right? Mm-hmm. So, but many of those institutional clients are in the United States. Mm-hmm. And thus far, American regulators have taken, as Teana pointed out, a very distinctive approach to regulation, which is largely the laws on the books are the laws that apply to crypto just as they do to other securities and other things. Tell us how you think about it.
I think where we are on the regulatory side is, I would characterize as unconstructive ambiguity. I mean, because we still do not have clarity as to whether ETH, the underlying token asset of the Ethereum protocol, is a security or a commodity. The CFTC has come out with a definitive statement. It's a futures through the CFTC, and the SEC has been unclear as to their position on this. So where we are on the regulatory side in the US is you have this massive amount of uncertainty. The value proposition that we can provide as a result is to say, okay, let's hold ourselves to the highest possible standard of a security. What would our product mix look like? And that's exactly how we've tried to conduct ourselves. And that's how we've explained it to institutions. I would say the vast majority of discussions with institutions right now is educational. So we're still at that phase. And think of it in the context of current finance. Tesla is roughly a 60-vol asset, 600 billion company plus or minus, probably a little bit lower today, similar to Bitcoin. So we talk about Bitcoin as though it's this pervasive risk, and it's speculative, and it's all these things, and it resembles exactly what we see with Tesla that people are very excited about because of the technological innovation. And I think as you start to see the tools that are used on top of these rails become more pervasive in the context of a cell phone. You can have an ETH operating system on a cell phone now. That becomes your digital wallet. That becomes a decentralized source of communication, so on and so forth. You'll start to see the application layer start to dominate attention, and the focus on the speculative nature of the underlying technologies go away.
And can I just say very, very quickly that not all crypto assets are speculative assets. So, I work for a company that makes what you'll hear called a stable coin. We prefer tokenized cash because it literally is cash in the bank. People bring us dollars. We put it in a segregated, safeguarded account. We don't lend it. We don't hypothecate it. There's no credit creation. Those dollars sit there. They just sit there. They just sit there. And you can take that digital dollar and run around and spend it. And then if you want your dollar back, you come to us, you give us the token, we burn it, and we give you your dollar. So, the idea that all crypto assets have kind of no intrinsic or inherent value is, kind of a sweeping statement. There's a lot of different types of assets within the moniker, crypto assets, and not all of them are speculative in nature.
Matt, I'm going to pick up on a point that Marcel made. A lot of people will agree with what I suspect is your point of view, that at least in the Western world, traditional finance works pretty darn well. But as Marcel pointed out, it's expensive. I could cite credit card interchange fees. I could cite account maintenance fees. I could cite wire transfer fees. I could cite overdraft fees, although bit by bit they're disappearing. If, as Marcel said, the dream of crypto is to reduce the marginal cost of financial services to zero, would that not be a really good thing for society?
Well, I mean, the fact that things have positive costs attracts resources into producing them. And if the marginal cost of financial transaction really were zero, then, what would Coinbase do? It's a lot. Yeah. I mean, it'd be all in on trading, I suppose. But yeah, I mean, there are ways to reduce the cost of financial transactions. Interchange fees are maybe too high, and other countries have decided they're too high, and they've put caps on them. The United States has flirted with that conversation at times and hasn't got there. But the idea that you have to pay for financial transactions, I think, gets distorted into the feeling that this is merely a friction, and that the intermediaries who are making the transaction happen are not actually doing anything. Whereas intermediaries give you multiple things. They give you a clearing system, they give you recourse, they give you a certain amount of legal certainty in the transaction. They give you risk mitigation and risk measurement in various capacities. Even a simple foreign exchange transaction. One of the big reasons to propound crypto is I can send anything in the world really fast. But to be able to send value overseas across currencies, you need to have banks in two different jurisdictions that can trust each other. Yeah. Well, but
my nephew just got married. I sent him $500. I wanted to send specifically $500, so I didn't send a Bitcoin, which to his dismay, he got USDC instead. And it happened in 3 minutes. We both had a Coinbase wallet, so there was no actual transaction cost because it was operating on the chain. And I was in the room with him when he got it, and it happened in 30 seconds.
Yeah.
So, no, I actually don't believe that there should be no cost. I think low cost is what we're going for. And I agree that there are other costs involved in financial services. There's KYC costs, there's AML costs, there's compliance, there's legal costs. I mean, there are costs to operating a business. A lot of the things that you've just discussed can happen within a smart contract and can be governed in a different way. We don't necessarily have to replicate the system the way that it is. But a very quick example, Circle is working with UNHCR, the United High Commission for Refugees, Stellar Network, and MoneyGram to provide assistance for refugees of the Ukraine-Russian conflict. These people are on the move. They've had to get up and pick up and leave their homes and leave everything of value behind. And so how do you get money to them? Typically, in humanitarian relief or disaster relief, you're palleting in cash. You're airdropping actual cash. It's not very transparent. There's a lot of slippage. There's a lot of corruption in the world generally. And so now the UN is able to deploy USDC onto this person's phone very, very easy to onboard, happens within minutes, and they can cash out at any MoneyGram anywhere in the world. That cannot happen with banking today. It can't.
Yeah. Well, but we saw this also in Turkey. They had an earthquake. People wanted to send money to help, and a lot of people sent Bitcoin. But then you have all these people in Turkey who need to sell Bitcoin for Turkish lira to be able to buy anything that they actually need, and the transactions costs of doing that are considerable. So if you want to start with currency and end with currency, you now have 2 transaction fees in between, whereas you used to have 1, and the spreads are considerable.
I just described to you using another crypto asset where that doesn't happen.
No, that's great. I mean, but it could be a money market fund too. I mean, it could.
Could it?
No.
No?
No.
So the marginal, we should be really precise here. The marginal cost of the transaction is 0. It's not that all costs disappear. And crypto banks can deal in dollars. They exist already. So these are banks. These are banks that have AML, KYC. You can't just walk in there. It's not Wild West.
And euros.
And whatever, they are banks. Yeah. They are not pseudo banks. They are banks. So we have to be really precise how we think about these things. Getting the marginal cost of things to 0 is wonderful. This is what innovation does. Now, second quick point, traditional finance. So think of somebody who's a strong opponent to these technologies. Jamie Dimon, JP Morgan. And I'm a JP Morgan client, and I love their service. It's expensive, overpriced, and they are overpaid, but it's a great service, right? I would prefer better service. Jamie Dimon will routinely come on programs and emphasize that he doesn't want to talk about crypto, blah, 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 any longer. Okay, great. JP Morgan has filed for a trademark on a digital wallet. That digital wallet does what? Deals in crypto. Because in the future, in the near future, not the distant future, we're all going to be working with wallets to satisfy microtransactions, and they can be in dollars, they can be in Bitcoin, they can be in Ethereum, whatever you prefer. Now, the sovereign is not going to give up the right to take taxes in their local currency. So I'm going to owe taxes in the local currency. That's a constitutional issue in the US. That's not going to change. Okay? I'm not going to pay taxes in Bitcoin. Therefore, the idea that Bitcoin and the dollar or the euro or whatever it may be are somehow oppositional is madness. They're complementary. I'm going to be paying taxes in dollars, always. I may choose to hold Bitcoin as an asset because I think it's going up in value, or I may not like the volatility and hold less of it.
But going back to the question about this being about, the banking system, there's 130 countries in the world that are looking at pulling together a central bank digital currency. The cash that you're holding in your wallet today, they want to tokenize. And they're going to issue it to you through the central bank. And the ECB, specifically in Europe, wants to do this direct to consumer. There'll be maybe intermediaries that kind of facilitate those transactions, but they want to cap how much you can hold. They will have access to the information around where you were and what you did and what you spent your money on. They can tell you what you can spend your money on. You can buy that, but you can't buy that. So ultimately, the financial system is moving toward tokenization, whether we like it or not. And so I started by saying we've got optionality, we've got choices. And so the more choices, the better, that allow us to transact how we want to transact. But the idea that everyone in this room isn't going to have access to, potentially forced to use, a digital wallet at some point, would you rather use an asset that provides some level of privacy and control, or do you want to use an asset that's given to you by the government that, the country that you live in and told how you can spend your money?
I, of course, like so many of my fellow moderators, have a million questions I could keep asking, but we're about to run out of time, and so I want to give each of our 3 panelists a very brief moment to say a last word. Matt.
Fiat money is not made up. Government money is not meant to expropriate you or to control you. For a very long time, the thinking has been we control the value of the currency to keep it in level with the things that people buy. There may be other ways to make those standards. I don't see a compelling standard in crypto that's likely to displace that anytime soon.
Marcel.
Never short innovation.
Teana.
Explore choices. There's lots of different ways that we're going to be able to send information and send value. And having that optionality is going to be very important.
Ladies and gentlemen, please join me in thanking Matt, Marcel, and Teana.